On today's episode, we are going to take a closer look at ASML Holding. The company just reported earnings and it did raise their full year guidance. Unfortunately, the stock price is down roughly 3.8% as I am recording. While it did raise guidance, there are some things investors should keep an eye out, and we'll take a closer look in today's episode. All right, so first, I want to take a closer look at their presentation. We'll do a very quick overview. ASML reports roughly 6.9 billion euros in net sales and 1.9 billion euros in net income for this quarter. Because of incremental DUV revenue, they do expect 2023 sales growth towards 30% versus the 25% they previously forecasted. We are going to see that this comes with a little caveat, and I'm going to discuss it a little bit more. But overall, things look pretty interesting. I mean, some key messages: growth in semiconductor end markets and increasing lithography intensity are driving demand for their products and services. So overall, I mean, right now we are seeing a lot of things affecting the semiconductor market, but in the long term, we do have plenty of bullish trends, like just more advanced semiconductors being built thanks to AI. And also we are seeing this growth of numerous fabrication plants being built all around the world, which obviously bodes well for a company like ASML. They do mention that net bookings this quarter was 4.5 billion euros. This is still low compared to its normal, but right now we are in this weakness in the semiconductor space. It is a bit of an improvement versus last quarter, and we're going to see the numbers right now. But we have reports, and I do think if you are a semiconductor investor, you do know that, hey, 2023 might not be the best year for semiconductor equipment companies, but I do believe maybe sometimes people forget that and just expect huge growth, especially with things like AI kind of changing the world right now. But this year, and we're going to look at some forecasts, this year is expected to be not one of the best for semiconductor equipment spending. They do mention out of that 4.5 billion euros, EUV made up roughly 1.6 billion. Now, if we take a closer look at current net system sales breakdown, we do see that most of the systems being sold are RFI, and RFI are usually their DUV products. That roughly makes up 49% of total revenue. We also see that right now the memory market is still being heavily impacted by the kind of global downtrend, and I do believe the memory market is one of the weaker systems right now, and one that's going to remain weaker for a longer time. At the moment, 84% of their net sales breakdown comes from the logic market, and right now we do see Taiwan being a big player, but China did jump a nice amount. We do have a little bit more to say about that later on in this episode, but we can also again continue to see total net sales in euros by end use. 2023 year to date, most of the sales obviously is coming from the logic market, and this is pretty interesting, right? Right now it's only the second quarter and it's already catching up to 2022 in forms of logic, but we can see that heavy weakness in the memory market right now. And you might be saying, hey, Jose, you said that this was going to be a bad year for this company in forms of revenue or in forms of sales, because we are seeing this weakness. These weaknesses are usually mainly seen on net bookings, right? Because these systems take months and months to be built. So the weakness is mainly going to be gone on net bookings. Revenue right now might still seem pretty nice because these are net bookings that they made many quarters ago, right? So right now, even though we might be seeing a weakness here, their revenue might not necessarily show that, because that weakness is only shown in net bookings, which might come out later on in future quarters. Another thing that's super amazing about ASML, right, is their capital return to shareholders. 2023 year to date, they already have a nice amount of dividend buybacks and share buybacks. So right now we can see overall it is a great time to be an ASML investor. I do believe the stock price being down, I'm not an ASML shareholder, right? I do enjoy other semiconductor equipment companies, but I definitely see the benefit of being an ASML shareholder, as they own this monopoly in the lithography market, and they have amazing capital return to shareholders. They also gave us a great outlook for the upcoming quarter 3 net sales between 6.5 billion euros to 7 billion euros, gross margins around 50%, and for 2023 they expect net sales growth towards 30% with a slight improvement in gross margins relative to 2022. So overall things look good, but now if we take a closer look at some other numbers, maybe this is where some investors might start to get a little worried. We can see that net bookings, and again, these are products sold right now, but obviously they take times to be built. Quarter one of 2023 was the weakest. Last quarter was super weak at 3.7 billion euros. And again, we're seeing this weakness in the semiconductor market. If you own a big fat plane, you might not be purchasing as much equipment right now because you don't know how long this slowdown in the semiconductor market might happen. So you're kind of waiting it out, and we're seeing it with net bookings. We can see quarter two of 2022 was roughly $8 billion. We can see quarter one of 2023, it dropped down to 3.7. Now quarter two of 2023, it jumped back up a little bit, jumped up a little bit quarter over quarter to 4.5. But compared to a year ago, these net bookings are still very, very, very weak. And I do believe this is something investors might be a little bit worried about. Maybe some investors were hoping that, hey, thanks to this whole AI craze and this demand for AI chips, that maybe net bookings would grow at a faster pace. Unfortunately, maybe it might not be meeting analyst expectations or investors' expectations. I do believe this is more of a short-term pain. In the long term of things, though, I do believe ASML is going to have a healthy net booking growth. Some other things to kind of keep in mind out is obviously this is a company that's known for numerous shareholder programs like buybacks and dividends. And unfortunately, we can see because of the slowdown in net bookings, the company is seeing a bit of a weakness in cash flow from operations and free cash flow. This was one of the first few quarters that the company actually reported a negative free cash flow, if we can see in the versus the past four to five quarters. So something to keep in mind now. We're also seeing a dwindle in cash flow from operations. Same time last year was roughly 2.5 billion euros. This year was roughly 385 million euros. So a big change. Again, one of the biggest reasons for that is the company seeing that shift in net bookings. On the bright side, the company is increasing their overall cash and short-term investments, roughly 6.6 billion euros in cash and short-term investments versus 4.3 billion in cash a year ago. So a few things that I want to say just from this that we can see are a little bit weak. We're seeing that slowdown in cash flow from operations. We're seeing that slowdown in free cash flow. We're still seeing that weakness in net bookings. And I guess investors were expecting a little bit more growth in that net bookings because of this huge AI craze. Unfortunately, it might have not met analyst expectations. Again, I do believe that most of this is short-term pain, maybe in the next year or so, but we are in a very nice trend in technology, right? Semiconductor solutions continue to innovate. There's huge demand for various products in the future. Numerous emerging technologies like autonomous driving, autonomous robotics, industrial robotics, AI, PC, AR, VR, the list goes on and on, where this is more short-term pain. As a long-term, if one is a long-term ASML investor, I do believe this is more kind of noise than anything. A few things that I want to take a closer look at their transcript, where the company does talk a little bit more of what's happening within their industry, and I do believe this is also what's impacting the stock price. But before we take a closer look at this, if you are enjoying the episode, make sure to hit the thumbs up. Make sure to hit the subscribe button. I'm trying to hit 30,000 subs by the end of the year, and your help helps out a lot. Also, if you want to learn more about about semiconductors, I do have a membership program. I did do a deep dive on ASML. That was one of my first videos. I do weekly deep dives on different semiconductor companies. Make sure to hit join, where I talk a lot about all their different products and all the different solutions that they have. Finally,
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so if we take a closer look at the transcript, the first one I think is pretty interesting. The first highlight I mentioned is they shipped only 13 EUV systems this quarter, and with those 13 EUV systems, they recognized roughly 2 billion euros. I think that's insane, right? That is insane how 13 systems alone makes up 2 billion euros in forms of revenue. So that was the good side. But now kind of talk a little bit of what's happening in the back end in the semiconductor market. Like I mentioned, a lot of uncertainty. So they mentioned that the semiconductor industry is running at very high inventory levels. We see this with the PC market, with the mobile market, leading customers to moderate wafer output as the supply chain works to reduce and rebalance inventory levels. In order to limit wafer output, customers continue to roll at a lower litho tool utilization levels. So companies like TSMC, right, they are seeing a bit of a down year in forms of revenue because they're seeing lower sales on customers like AMD, maybe like Apple. So maybe their plants are not running at 100%. They're probably running at 60, 70% utilization rate. So for them, it's like, hey, look, we're not running at full levels right now. There's no need for us to go and purchase equipment right now. Maybe later on, yes, but at the moment, no. At the end of the day, though, they do have a resulting backlog of roughly 38 billion euros. I think this is insane exiting the second quarter. They do mention that the EUV business is where they're seeing some shift in demand timing. The majority of the shift are due to fab readiness. So most of this kind of slowdown they are seeing in demand is mainly on the advanced chip, the extreme ultraviolet units, and the main reason is fab readiness. Fab readiness means we're seeing globally all these fabs or semiconductor manufacturing plants being built all around the world, but due to numerous delays of maybe plants taking a lot longer than expected, construction hurdles that they need to go through, some of their customers, and obviously this inventory correction, some customers are taking a little bit longer on demand timing. So that's obviously the first thing. They do mention that deep ultraviolet demand still exceeds supply, which is a great thing. We'll talk a little bit more about that in a bit. But they do mention that if you have been following ASML, one thing that they are doing is to kind of meet up with demand and shipping. They are shipping a little bit faster than usual. They are kind of reducing the amount of tests that they normally do. So because normally they would build the product, they would test it numerous times, and after they would test it numerous times, they would ship it out to their customers. Customers want their products so quickly that instead they build it, they do a few tests, then they ship it out to customers, and then they finalize some of those testing on the customer site. And that has kind of caused a delay in revenue. The company says that they are improving some of these delayed revenues, and because of some improvement, now originally they were expected to delay roughly 3 billion euros from 2023 into 2024. Now, because they are reducing the amount of delayed revenues, instead of delaying 3 billion euros, they are delaying only $2.3 billion delayed in revenue. So this is the main reason the company is increasing their guidance. It's not like they have more systems to sell or anything else. All it has to do is with delayed revenues kind of shifting. It's all an accounting practice. The company is not being, I want to say, sketchy with it. They let us know that that's the reason that they are seeing a better growth this year in 2023, but it's just because of timing issues where they thought some of this revenue was going to go in 2024. They now expect it in 2023 instead, which is going to overall help the company see revenue. So because of this offset in revenue or lower revenue expectations, they do expect their extreme ultraviolet revenue to be more of a 30% year-over-year growth versus a 25% year-over-year growth. So overall, great. It seems like great news if you just look at the headlines, but there's pretty much no change. I think one of the biggest issues that's happening here is because of supply chain issues, they now expect to ship around 52 systems this year of extreme ultraviolet, translating to a year-over-year revenue growth of around 25% versus previously communicated expectations of around 40%. So they are still seeing a lot of things. Like I mentioned, the customer adjustment in demand timing due to delayed fab readiness, but also because of some remaining supply chain issues, they're not going to see a strong output in the extreme ultraviolet units. And I do believe investors are a little bit worried about that. The company also mentions that the Dutch regulations, this is a Dutch company, some new Dutch regulations came into place, and these new Dutch regulations are going to go into effect on September 1st of 2023. With these new regulations, ASML needs to have some export licenses for certain of their deep ultraviolet systems. So the company mentions that, hey, this is kind of with what they thought the market was going to go, and their expectations are aligned with these regulations. So no changes on their overall financials that they have kind of talked about in the previous quarters. So if we kind of take a step back real quick to see what's happening with ASML, a few things, right? Net bookings, even though it grew quarter over quarter, is still slowing. It's still very low compared to a year ago numbers. We see cash flow from operations is slowing down a nice amount. Free cash flow is slowing down. We also saw a slowdown in their extreme ultraviolet due to various factors from macroeconomics to fab readiness to supply chain issues. And then we're also hearing kind of more issues impacting them in form of regulations thanks to the Dutch government, even though it's not making any impact for them and they believe that it's aligned with their expectations. All this is causing a lot of uncertainty for the company. So there is a final thing that's happening, and now we're going to take a closer look at the deep ultraviolet. And the deep ultraviolet is still also impacted by by what's being impacted in the extreme ultraviolet, right? It's being impacted by supply chains, it's being impacted by fab readiness, it's being impacted by a lot of other macroeconomic environments. Fortunate for ASML, though, they do have a secret weapon in this market that they don't have in extreme ultraviolet. In extreme ultraviolet, they don't have the opportunity to sell those products to China. The deep ultraviolet, they do have the opportunity to sell to China. And even though extreme ultraviolet is also seeing the same impacts as extreme ultraviolet, because they do have that Chinese customers, those Chinese customers are saying, hey, look, you have barely been shipping to us in the past few quarters, in the past few years, because you are sending these units all around the world. Now that some of your customers are unable to take it because of everything that's happening, us here in China, or the Chinese customers, will gladly take these tools as they become available. So it does seem like, wow, even though there is growth in the deep ultraviolet systems, they are still being impacted by the same things happening in the extreme ultraviolet. But fortunate for them, they do have the Chinese customers that are able to offset that growth. I think investors are not happy that that's the main reason that deep ultraviolet is still seeing some growth right now, because if for some reason the Chinese customers were not there, they would obviously be experiencing another downfall in this market. So I want to say that's pretty much impacting the negativity of ASML. On the bright side, if you are following my semiconductor channel, I did take a closer look at the semiconductor equipment mid-year total equipment forecast, forecasted by Semi, a great semiconductor information company. We can see that 2023 forecasted is expected to be one of the weakest years for semiconductor equipment spending. Again, we are seeing that very well with net bookings being very low for ASML. For where 2022 was, I think 2021 and 2022 were both $100 billion sales in semiconductor equipment. For 2023 is expected to decrease to roughly 88 billion. Luckily for ASML investors, is expected to jump back to 100 billion in 2024. So this is why I mentioned that, hey, right now equipment spending might be low for this year, and a lot of these hurdles that ASML is going through is more of a short-term pain. It's not going to be long-term pain. The other huge bullish trend that's happening is we are seeing this huge advancement in semiconductor manufacturing plants being built all around the world. We're taking a closer look at this presentation submitted by Bessie, and they kind of talk about all the plants that are being built within the next few years and how much money is being spent. In the United States, we have numerous plants from TSMC, from Micron, from Intel, from Texas, from Global Foundries, and we can see that's great news for companies like ASML. So they're going to be spending billions and billions of dollars on semiconductor equipment, which obviously bodes well for ASML. So we can see ASML stock price is still down roughly 3.8% as I am recording. I do believe if you are an ASML investor, this is not, earnings isn't any reasons to sell. I don't believe earnings were great. I do believe we did mention a lot of the weakness and a bit of the uncertainties happening with ASML Holdings and the company in general. But like I mentioned, most of those hurdles are going to be short-term pain and nothing a long-term investor should be worried about. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.